QuickBooks Online 2021. Recurring Transaction Adjusting Journal Entries Part 2. Let's get into it with Intuit's QuickBooks Online 2021. Here we are in our QuickBooks Online practice file. In a prior presentation, we set up recurring transactions related to adjusting journal entries. Now we're jumping back in there to see what the impact will be after time has passed, to see what has been recorded or the reminders produced. So we have our information down below on the first page related to the reminders that says tasks here. Respond to your reoccurring template reminders, and we can go to the view reminders here. This is a nice tool. It's not as blatant as it could be for me because, again, I don't always look at the middle of the page with QuickBooks Online. I'm typically going over here to the side or up to the top to the cog. But this is a nice thing to have, that if you want to go into your reminders, then you select this item, and that should pull up your reminders field. So this is not the field for the transactions. The transactions are here if you go to the back button. And even if you're going to be using the reminders a lot, I would get into the habit of always going there by going to the cog up top and then going to recurring transactions here, and then possibly checking the reminders from time to time by going to the reminders tab up top. That takes us to the same spot, but then you can be proactive to checking on them each time. I'm going to go back to the recurring transactions. I'm going to close the hamburger for now. We're looking into the journal entries now. So adjusting journal entries are typically things done at the end of the month or year. We could sort these transactions, these recurring transactions, by hitting the item up top, and I could sort by type of item. And I'm looking here for the journals. So these are the journals which are in the format of a journal entry, because that's the format of the adjusting journal entries. We can also, of course, sort by the journal entries. I can hit the drop down up top. I'm going to sort by type this time, sort by the journal entry. Then we're going to say apply that. So there we have our two journal entries. We had one related to depreciation and one related to prepaid insurance. Let's do a little bit of a recap on this. I'm going to open up our balance sheet and income statement by going to the tab up top, right-clicking on it, duplicate that tab. We'll duplicate it again, right-clicking on the tab up top, duplicate that tab again. So then we're going to go down to the reports on the left-hand side. We'll be opening up the profit and loss. Let's start off with the good old P&L, profit and loss. Close up the hamburger, hold down control, scroll up just a little bit. And so we're at the 125. I'm going to go to the report to the left of it now, or the tab to the left of it, so we can open the report in the reports tab on the left-hand side. This being now the balance sheet, the good old BS balance sheet report, closing up the hamburger up top. So we had then these transactions related to, or we put in place the adjusting entry related to depreciation. So we have equipment on the book, and we're saying basically that we're going to record depreciation on it on a monthly basis, which is a reoccurring transaction that we can basically standardize if the depreciation was something like a straight line depreciation. However, if it's something other than straight line, we might have to deviate from it a little bit, although the standard format of the journal entry would be the same. The numbers could differ. We'll talk about that more shortly. And then we have the prepaid insurance up top. The prepaid insurance is a similar kind of transaction or adjusting process or accrual kind of process as with the fixed assets, except for the prepaid insurance, we bought a year's worth of insurance up front, and then we're going to apply it out monthly, and we can take that directly to the prepaid insurance instead of having another account as we do down here with an accumulated depreciation. We will write down the insurance directly and then record a decrease to the insurance as it is consumed. The other side then going to the expense account. Now, the prepaid insurance is usually going to be one that's a little bit more straightforward because there's not going to be any deviation. It's not like the fixed asset down here where we might have a double declining balance or something that makes the amounts differ even though the accounts will remain the same. The insurance will probably be fairly standard from month to month, the same amount. So we can basically just record that to record each month if we so choose. Let's go back to the first tab then. If we go back to the first tab, so we set these two journal entries up. Now, it would be set up so they're going to happen at the end of the month, but we did the next day just so we can go back into there real quickly and see what has happened. So the insurance, because we're imagining it would be the same amount, we made it as scheduled, meaning it's not going to be something that we're going to have to go in as a reminder and then complete the transaction. It's just going to do it automatically. And then we have the reminder item up here for the depreciation one, and we're imagining that might be a good deal or a good way to set it up so that you can memorize the format of the transaction and change the numbers if you need to. So if we go into this insurance one, note that one is not going to be in the reminder list. So if we go to the reminder list, we're only going to see the depreciation one. If we go in here, I'm going to select the all button and then go to journal entry so that we just see the journal entries here. And these are the two that are related to depreciation, one for today, one being a reminder for tomorrow. These are the ones that have not yet been recorded and will not be recorded until we, do the recording for them. If I go back up and go to the reoccurring to the transactions here, then let's look at this one first because it should have been recorded already on the insurance side. So if we go then to the balance sheet and I drill down on the prepaid insurance here, then we're going to have this recorded already. So it was put on the books. The beginning balance was at that 11. I think if I go back to 2020, let's see all the prior information on it, run the report. So it started out on the books we bought it for the 12,000 and then we tested out just recording the journal entry at the same time that we made the purchase. And now we're saying 1,000 a month. It's going to decrease by 1,000 a month. We wrote that off directly to the prepaid insurance. And you can see how you could set that up for some of the adjusting entries can be fairly standardized. And that can make it a lot easier if you set this up properly to do things like the prepaid insurance and do them properly on an accrual basis. If I go back up top, go back to my reports, note that this prepaid insurance, prior to this, we have just simply been recording it to expense, which isn't quite right, especially if you pay for like an entire year's worth of insurance, because it distorts the income statement. If you use this kind of method and you set it up properly, right, when you buy the insurance, it actually makes it pretty easy. One reason many people will do that, more of a cash basis method, just record the cash to an expense, is because it is easier. Otherwise, we got to go in here every month and record an adjusting entry at the end of the month. But because this adjusting entry is pretty standardized, at least after the first month, which might have like a partial period to it or something, then this becomes fairly easy to record. And if you set up this adjusting transaction, it'll then be automatic and you don't even have to really think about it. And it's not as easy as just expensing it, but a little bit easier once you set it up. It's pretty straightforward. And then we have the other side on the profit and loss. Let's go to the P&L. It's, of course, going to be recorded on the insurance down here. If we go into the insurance, there's our journal entry that has recorded this one in the format of a journal entry. If we go into it, obviously, it's going to be in the format of a journal entry. So there's our adjusting entry. Closing that back out, scrolling back up top, and going back to our report. Let's go to the first tab again. Now, this time, we want to take a look at the depreciation one. It's a reminder. Therefore, it will not record it until we go to the reminders. Let's go to the reminders here. Let's just record this first one. So I'm just going to record this one, then we'll check it, and then we'll think about a situation where we might need to adjust the journal entry. So I'm just going to go ahead and say, okay, this one looks good. Let's create it. I'm going to go ahead and say create that one. There it is. And then if I go back to the balance sheet and I run it, running, and then we go down. Now we've adjusted this one. The accumulated depreciation has gone up, which is decreasing the book value of the asset. So if I go into this item, there's our journal entry that we just recorded there. Other side, going back, is here. If I go to the balance sheet, the other side, if I run the report, should now be included in the depreciation expense down here. So depreciation expense, there's our journal entry there. Scrolling back up, back to the reports and back to the first tab. Now note that this works great if the depreciation happens to be straight line and it's straightforward, to do it, and you have the same amount each month. But many people will have their depreciation done by an external source, possibly your tax preparer, possibly with the help and use of tax software, which will have a depreciation schedule tracking every piece of equipment and then applying the proper depreciation rate, which could be straight line, double declining, or you might be on tax depreciation or something like that. And so therefore the amounts for each month will not be the same. And this is where the adjusting entries that you do, you're going to have to be dependent in some way on the tax preparer. So you want to work out how you're going to deal with that with them, as they might be the best place to actually track the depreciation schedule, because they have to do it anyways for taxes. But if you want to do it on a month-by-month basis, then if I go back to the first tab, let's test out this second one. We could make an adjusting entry that's going to record the depreciation expense in format and then ask the accountant what the numbers should be for it each time. And you might say, well, what's the point of doing that? This is a pretty straightforward journal entry. If I go into it, for example, if I edit this item, then it's just debit depreciation expense and credit accumulated depreciation. But note, it might be more complicated than that because we might have different categories of depreciation. We might have property, plant, we might have equipment, furniture and fixture, automobiles, improvements, buildings, and we might have a different depreciation, accumulated depreciation for each one, and a related depreciation expense for each one. So you can imagine then if I had 5 categories, then I'd have to have like 10 accounts here that it would need to be recorded. Pretty straightforward accounts still, pretty easy accounts, but still could be a long journal entry. So just to record the accounts here that have the proper format in terms of debits and credits could be useful. And then you could go and ask your accountant every month or get the depreciation schedules so that you could figure out what the differences should be in terms of the debits and credits that you'll be filling out. And then you can go in here and say, all right, now I'm going to say this needs to be for this month, like 400, let's say, because that's what the depreciation schedule says. And we'll say that. And then if I save it and close it here, this is actually recording the transaction. So this will actually record the transaction. It's not going to change the template. The template will remain the same. This will record the transaction. So I'm going to save it and close it. Save it like so. Now, it didn't disappear here, and I think it should have. So you could, now that it's still here, and this is in the item, the reminder list, I don't need the reminder anymore, so you could try to skip it here. But I think it's just kind of a glitchy thing that it's stuck there right now. So if I go back to the prior one, and then I go back to the reminders, it should disappear because we basically used it. If you try to skip it, then it'll give you an error message and it'll disappear if you go back and forth again anyways. If you want to change the actual amounts in the actual reminders, we go to the recurring transaction. Then you could go into this schedule and edit it here, and that would change the actual amounts. Notice they still have not changed, and so you have to go into here to change the amounts for the next time period. So then if we look at what has been recorded, I'm going to go back on over to our balance sheet and check out this one. I'm going to change the date actually to the 22nd because I think it recorded it as of the tomorrow, which is the 22nd here at this time, this point in time and space in the continuum of the two. We have the 220, there it is, the 400 there. I'm going to go back up and then back to the balance sheet and then the income statement, profit and loss. And let's bring that up to the 22nd too. 22nd. Run it. And then we're going to say there it is, and the other side is here. So that looks good. Now you may not be able to do that for all kind of adjusting entries at the end of the month, and you always want to be thinking about what adjusting entries do I want to do, like on the bookkeeping side possibly versus having someone else that does the adjusting entry possibly for taxes or for the financials at the end of the year or at the end of the month or something like that. So you can take a look at the list of adjusting entries that you typically have and see which ones might fall into some kind of standardized pattern. And then you could set up your reminders to hopefully make that pattern easier.